All right, to talk more about China's economic performance in 2013 and what we might expect this year, Professor Zhu Ning, Deputy Director at the Shanghai Vance Institute of Finance, and Mr. Einar Tangen, our current affairs commentator, joined us on the program tonight, of course, as well with our lovely colleague Lily. Gentlemen, thank you for joining us on the program today. I want to first start by asking you both your thoughts on the 2013 growth rate, 7.7%, of course the same as 2012. But I want to ask you this as well, because policymakers here in this country have stated they are willing to tolerate slower growth, right? How slow do you think they will tolerate slow growth? And if it gets to a point where it's very slow, do you think reforms might be in jeopardy? Professor Zhu, let's start with you first.
Well, I personally is actually pretty happy with the 7.7 growth rate. I think, to be honest, it is slightly higher than my personal forecast because we have to keep in mind that the U.S. economy was not as strong as it is right now about a year ago. And also, let's not forget that there has been a lot of speculation about what is going to happen in the third plenum. So there has been some pause in the reform and there has been some pause in the investment projects.
Right.
So regarding how low the government is willing to tolerate the economic growth to go down to, I was thinking maybe 7%, but then some people are probably shooting for higher, 7.2 or 7.5. But I think it's not really the growth. To me, I think it is the sustainability. It is the balance between the growth and the quality.
Right.
Because we have seen that the economy has been growing really fast in the past 5 years, but then it's actually causing some more problems, especially in the financial sector and in the infrastructure and real estate sectors. So I think there's some balance one would have to strike about, well, we want some short-term sprint, or we want some marathon which can be sustained for the next 2 to 3 decades.
Okay.
So you would actually compromise a little bit of the growth rate in order to achieve more quality. So Mr. Tangen, how slow is too slow?
7%, I would agree with my colleague completely. If it goes down to 7, you're going to see rapid things. But unfortunately for China, it's going to be a boom year. I think what you see here is China has picked, or maybe not picked, but has been fortunate. The year of the horse will bring in a number of benefits, but it will allow China to continue its reform process, to wring out a lot of the excess capacity that's been building up in the industry, and to deal with some nagging problems that they have in the banking financial sector, especially the shadow area and things like that.
So what is your take on the forecast of year 2014?
2014, this is first for me. I'm actually agreeing with the rosy picture that the World Bank has put out. They're saying above 8. I would agree with that. I think there's some other people who say that. In November you had a 17% rise in exports coming out of China going to the U.S. I think there's just strong demand is going to continue as it goes. I mean, world growth is about 3.3%. As estimated by a number of people. I think China is going to be a strong part of that. I think it's actually going to wind up, a full point on China is what, about an 1/8 to a 1/10% world GDP. I think you could see that going up to 3.5.
But Einar, the World Bank always revises down its world growth outlook, as does the IMF. And I want to ask you, Professor Zhu, because Einar touched upon exports, and I want to break down sort of the components of GDP. And of course, exports are a component, well, net exports are a component of GDP. What do you think China's export picture will look like in 2014? Do you think it's going to rebound? Do you think it's going to be a little bit sluggish? Because we do have the World Bank and the IMF both revising global economic outlook up this year.
Yeah, I do see the export to keep growing in the coming year. I think for two primary reasons. One is, we're seeing the tapering off of the quantitative easing by the U.S. Federal Reserve, which is signaling the good economic rebound in the U.S., which is translating into stronger consumption demand from the U.S., which is the largest partner for China.
But that could cause a lot of volatility, though, for the emerging markets.
Emerging, but not China. China's is a perfect seat.
I don't fully agree with, but I think to a greater extent. I think the second reason is, I think China is transforming its own economy. I mean, we used to be producing just lower end, low value added products, but now I think China has its own research and design, has its own brand, and so I think it's creating a new market niche where I think Chinese companies are exporting more to the higher end countries such as the U.S. So I think China may be benefiting from a compounded effect of the recovery of the U.S. and its upgrade into a higher value-added area of the export products.
Your thoughts on this, Einar?
I think the big story for this year was going to be about China going outside of China. I think you're seeing a lot of companies that are seeing limited growth here, and they're starting to look elsewhere. And not only is that being reflected in the economic sense, but also in the political sense. China is taking a much more forward role in a number of international issues, and I think this is reflected. I mean, the opportunity here is Chinese products have been sold overseas for years, but there's always been a middleman, somebody doing the representing. With Chinese companies taking their products directly to the markets, they have to solve the aftermarket services issue and get over the how to sell bump. But once they do that, there's a lot of profits to be wrung out.
Well, I mean, the picture for trade, though, Lily, I feel is not very auspicious for the beginning of 2014 because the Baltic Dry Index, which is basically a proxy for global trade, if we take a look at that index since late December, it's basically crumbled by about 30 to 40%. It's not really auspicious right now for global trade. But Lily, you were going to say?
I was going to actually shift to another topic about government spending. Would you see the government spending much more on infrastructure in the year to come? Well, in this new year, though. We're already in the new year. I always forget about that.
I think they'll be much more efficient. I think you're seeing a drive now. I mean, you've seen cancellations of major projects within cities, but a lot of these projects were not necessarily investment projects. There was no return on them. They were perhaps more driven by ego. So by wringing that out and putting in hard infrastructure, transportation, utilities, building the necessities for lower cost housing, I think China could do very well. But it's going to be a lot of it's this, the 60-point plan and how this all kind of comes together. Everyone's waiting and holding their breath to see what the details are going to be.
Well, if China's growth continues to slow, Professor, do you think the government will spend a lot more this year? Because in terms of fiscal revenues, in 2012, that increased by about 13% year on year, which is not that high historically. In the latter half of 2013, that was up by about 16%. So given that, do you think the government will spend more? And usually when the Chinese government spends more, that contributes more to growth, I would say, than consumption.
Yes, I think the government certainly has the ammunition in its control. So I think if the economy is really falling down, say below 7%, we'll definitely see a greater deal of stimulus. But then let's not forget about what has happened after the 4 trillion stimulus packages. So I think the government has already learned its share of the lesson, and so I don't see another big deal of stimulus packages after the economy is slowing down. I think there will be some a surgical treatment about, well, maybe in the consumption area, maybe in the public highway system, maybe in the railway system, but then not as grand as what has happened in 2009, because what we're dealing with, some of the problems, the shadow banking problem, the local government debt problem, and some of the risks being accumulated in the financial system, that actually dates back to the 4 trillion stimulus packages 5 years ago.
Right.
And also talk about markets. Investors right now are pretty jittered about possibly the central bank turning towards a pro-tightening policy, given that the GDP figure came in modestly better than expectation and home prices rising. We just saw that. What is your take on that, Professor Zhu?
Well, I think as the central bank has reiterated for many times, it will retain a neutral or a sort of tightish monetary policy. I think on that, I don't think any of the figures that we have seen recently is going to change their belief. The question is, well, how will the financial reform be able to release more capital given the same amount of monetary supply? One specific example is the trust companies and the wealth management products.
Right.
Even though we have not seen increases in M2, the broadly defined monetary supply, we actually have seen a lot of money creations being transferred from the savings deposits into investment projects. So that, I think, is where people should pay more attention to, whether we will see a greater deal of monetary supply, not from the central bank, but from the shadow banking.
Okay. We've got about 1 minute left, gentlemen. I really want to squeeze this question in because when we talk about the economy, I feel we always have to talk about productivity. China's growth has been slowing, but I feel there's so much productivity potential left for China in terms of the central and the western regions, as well as we've got about 600 million people in the rural areas. What do you think, Einar? Can we possibly see double-digit growth again, or at least 7-8% growth for the medium term if productivity in China picks up?
I think it will. I think what the government is doing right now, is aimed towards creating a better future. They're not driven by the quarter idea that we are so much in the West. They're looking long-term, 5, 10 years down the line, and I think that is one of the strengths that China has from a central planned economy. In terms of how this kind of works out, as we were discussing earlier, the idea that you go into a bank today and you see numerous people still stamping things while the computer sits next to them, and they're adding. It used to be they just stamp things. Now they stamp things, and getting those people productive will have a huge benefit for China, and they don't have you don't have a choice given the demographic shifts.
Right. Professor, your thoughts on this productivity?
I totally agree with Einar. I think productivity is the eventual driver of economic growth. So we're having some of the economic growth coming from investment, and that has its own side effect or consequences. But then I think the true economic growth is going back to how to improve the productivity of your labor forces and how to make your entire economy working more efficiently, how to better integrate a different type of resources, human labor, capital, and land.
Absolutely. A great discussion, gentlemen. Einar, you're going to leave us, our current affairs commentator, Einar Tangen. Professor, you're going to stay with us. We're going to talk with you in just a short